With Warren Buffett basically saying that it's time to sell, Jerome Powell coming out and saying everything is not perfectly fine, and the market setting up right here a interesting pattern. Could this be a topping pattern for the week? Could this be a topping pattern for the year? Is the Santa Claus rally going to be canceled? Are we heading to new lower lows? Are we going to break 640? Is the bear market coming back? Or is everyone full of you know what? Make sure you guys stay tuned to the end of the video to know exactly what's going to be going on. We're going to be breaking down the market, exactly what happened this week, what's going on in the bond market as well, because I thought for a second we were supposed to be getting cheaper rates, and not the actual opposite after Jerome Powell talked. We also got PCE came in a little bit of mix right here, and we're going to be digesting all of this and more, along with giving you the exact levels you need to trade the market this week to know if you need to be bullish, bearish, or don't be like these group over here, which is net speculative positions that I always make fun of 172,000 closing from 225,000. Again, if you guys haven't followed the channel for a long period of time, we're neither a bear or a bull, but when you have this many people just screaming at the top of their lungs, saying the market has to go down, I chuckle to myself and say, thank you very much for your donation to the stock market, and I'll see you at all-time highs. So again, the market actually did break to new all-time highs this week for the record, breaking through the weekly barrier. However, it was an interesting one, right? So we broke through on Monday, failed to hold it Tuesday, and just subsequently had a crash to support on Thursday with a nice rebound actually occurring, gap fill, kind of settling in the middle of the week. So we went absolutely nowhere, the maximum theta burn on individual options, and market makers were pretty happy with that. The NASDAQ, similar story as well, actually didn't come down to support, but did break to a new weekly high. The Russell, almost the exact same story, right? So it was a exact same story across the board for the broader market. Now, leading to the natural question, what happens next, right? And the levels are going to be the exact same like last week. Why are we keeping the levels exactly the same like last week? Because we really didn't get out of them, right? So why are we going to break something that is not already broken and break the trend, right? We're at 664, 654 as the range for the S&P. And we're going to be talking about which one I theorize is going to be more based on the news catalysts that are coming out this week and so much in that. But I want to bring your attention to stocks like NVIDIA that have been range bound for quite some time. This is just setting up to be like the ultimate bull flag that is staring everyone in the face, but no one's really talking about it. And that's why I think this week is going to be a breakout week. I think it's going to be a bullish week. I think the S&P is going to break to new all-time highs. I think the bears are going to finally capitulate, and these net speculative positions at 172,000 are going to break down in tears of joy and sorrow to essentially crush. But let's talk about PCE while we're here. PCE came in on Friday, not as hunky-dory as everyone expected, right? All in line numbers, personal income and spending came in a little bit higher. Income came higher, spending as well. So kind of the pain and misery is continuing. PCE came in line, so the markets took that as a bullish thing, and rates stopped demanding a higher premium as things were evolving in the market. It did not change much of the Fed expectations for December, still sitting at an 89% chance we'll get 2 rate cuts between now and December. The future of the next year is very unknown, considering we don't have the SCP of how many cuts and everything conquered in December. That's really when everyone kind of cements their interest rate expectations, because we can go out to December and just see it's a very large hodgepodge of numbers. So for the S&P, really just doing a quick rundown of what the levels we're going to be looking at this week. Again, same as previous week, looking for that rotation above the current close of 660 roughly, and then 664 to be broken, 654 not to be challenged. I really don't want to see price action below 657. And then the NASDAQ, again, 600, got to get back above that psychological number. Don't break down 584.32, and really don't come below this rotation of 588. That'll be the plan for the week. We're not really seeing a lot of rotation to the downside or any catalyst that could get us there. Russell, similar story. We stop right at the gap at 241.37. We need to break 245 flat, and then don't break down below 236.76. So that's the plan for the week. That's pretty much simple as a slice can be. Bitcoin, I thought you were actually going to do something bullish, and subsequently you're either forming the W of the century, which is forming right here, or we're forming an absolute bear flag to the downside. And I will be eating those words like, hey, Bitcoin's not going to hit 100,000 in the next 2 weeks and maybe in a quarter, and then it hit it instantly. So again, we admit when we're wrong. Again, we're not going to be sitting here sugarcoating of like we only have perfect trades and all this. And again, like everyone kind of just shows you the winners. We showed the losers, winners. But RSP, this is where I really want to bring everyone's attention to. The broader market actually found support on the 50-day moving average for RSP, leading to believe the last time this happened, which was Monday, August 1st. We can go back to the S&P and see what happened then. Well, we just start rallying. We just start rallying, and kind of stair-stepping up, which would be nice going into the Santa Claus rally period where the markets traditionally are more bullish. That would also give us a nice tight bear squeeze on the broader market. Some of the undervalued stocks that I want to talk about is Netflix, right? Just hugging this 50-day moving average. This could either be one of the best plays that I'm gonna do or absolutely blow up in my face. And I'm not recommending necessarily anyone buy it, but I'm just looking at Netflix is coiling and this thing is about to explode one way or another. It is either going to explode epically to the upside and as they're heading into earnings coming October 21st, literally a month away. This could be an early earnings play. This company has a technicality to run into earnings, and similar to like the banks with JP Morgan, which again, JP Morgan earnings is literally around the corner. Who would have thought that? Wednesday the 15th or 14th. So that's like what? 3 weeks. JP Morgan, again, this has a high tendency to run. So if you want to get into bank stock, JP Morgan's the one to get into. Its earnings are going to be insane. It's also dividend on Monday the 6th. So if you want to hold the stock and then also get paid the dividend, not a bad play. Tesla just absolutely creaming everyone, forming a classical bull flag pattern right here. So again, we're seeing more and more of these bull flag patterns, but yet everyone wants to be super bearish on the market. And let's just take a look at what next week holds. And by the way, GDP actually came in better than everyone was expecting. So it just gives more credence to the Fed is going to cut rates. And I'm going to show you guys one more data point after this to cement that the Fed is going to go and cut rates, that inflation is going to come in lower. And there's one piece of evidence I want to show you. We're going to get home price data. That's going to be very interesting to see. We saw new home sales going up and staying relatively strong, but not really moving on the price aspect. Chicago PMI, consumer confidence, and job openings. So again, it's the beginning of the new month. So therefore, we're going to get payrolls this week. So it's going to be very, very interesting to see how this all plays out. ADP, 54,000 previously, nothing expected yet. This one could be spicy. ISM manufacturing, but again, I really want to get to the payroll numbers. Non-farm payrolls, 39,000. That is a very low expectation for non-farm payrolls. Unemployment, 4.3, unchanged from previously. And private, 35, 38. So you're very close dancing with that negative number. Are we going to get a massive revision to the downside? Are we going to come in line? And how is the market going to interpret these numbers? Throw it in the comment section below. I think it's going to basically be one of those like good news is bad news is good news type situations, because that means the Fed is going to cut rates, going to save the market. Bad news forces the Fed to cut rates. That's how I think they're going to construe it in their head. But the data I really wanted to show you is what the Fed has been looking at: short-term and long-term inflation expectations. And what is that exactly? Well, Michigan and consumer confidence and expectations come out about every month, where we can see what the consumer is expecting. And they actually came in lower than expected, which is really good because that means people are saying, okay, I'm willing to spend a little bit more money because there's not much risk that that money is worth less in the future than it is now. So again, and people have money, they're willing to do it. They feel a little bit of an ease, not completely, but a little bit of an ease, which is going to lead to more spending, more profits for companies, and it's going to launch the market higher. And we're setting up perfectly fear and greed right in neutral territory to be a absolute greedy winner take all week. And again, I like to remind you that all the bears are shorting the market. So if you guys don't want to be short some money at the end of the week, check out the latest two videos I did on Lennar and DR Horn in the bottom left, along with the other video we did on tech and the earnings for dividends. Make sure you guys check that one out. Thank you all so much for watching, and I'll see you in the next one.